Hey everyone, I welcome you all in Hold with Priyank, and today we are going to discuss a very important and interesting topic that is called liquidity. You might have heard this word in several ways. In finance, you might have heard that broker has a low liquidity, that coin has low liquidity, that stock actually trade with low liquidity, so I don't trade that. But most importantly, in technical analysis, you might have heard some people are changing their lives using liquidity concept. Even Priyank, you are teaching on your Hindi channel liquidity concept, which are changing the way people trade or analyze on technical charts. What is that? Can you explain it to us? Yes, today I'm going to discuss what is liquidity with the examples on technical charts. So stay tuned with this video. Just read this disclaimer and I'll explain liquidity. All right, so let me go ahead and explain you what is liquidity. So the very first I'll be using this plain board to explain you liquidity concept. All right, so first understand this liquidity is actually made from a word liquid. All right, and liquid is not the state of matter which you have learned, liquid, solid and gas. No, it's not that. Liquid is something which in usual language we use for our assets, like, see, your cash is your liquid asset. You might have heard this. You might have heard your mutual funds, your stocks, investments, even your properties in real estate. These are not liquid assets. You might have heard that saying, or you might use it on daily basis with your family, with your friends, that real estate is not a liquid asset. What does this actually mean? I'm going to explain it to you first. So, in simple terms, we call cash as liquid assets, or we say that cash is an asset which is a possible to liquidate very quickly. What it means, when you go to your grocery store, you can buy fruits, vegetables immediately using the cash, right? So anything which you can convert into commodities, into your essential things you want to buy, you want to travel, everything you can do using cash. But can you go ahead and say anybody, hey, I have a property there, I can sell one portion of that to you, give me this 5 kgs of apples? Can you say that? You can't. That is not easy to liquidate. You might have to spend months to sell a property. That means that real estate is less liquid. All right, so liquidity gives a sense that anything which can be liquidated quickly or which can be converted into the cash quickly, anything which can be converted into the cash quickly is called, that is more liquid, or that can be used as a transaction between two buyer or seller frequently or very easily. That is called a liquid asset. So now you understand what it actually means, liquid word here. And liquidity is a kind of, you can say, we are using as an adjective for anything which can be liquidated quickly. So any stock which you can sell very quickly is called, that is a liquid stock. If any crypto coin you can buy and sell immediately, you will call that coin has high liquidity, such as Bitcoin, Ethereum, and you can buy and sell that immediately. But if any new coin is there, or you are trading on DAX, or you are using any penny stock, that might take days you to sell, that might take hours to sell, because there are less buyer and there are less seller. That's why we call that is less liquid. All right, so you understood, anything which can be converted into the cash quickly, that is called liquidity. In the similar manner, on charts there are some areas, okay, on a technical chart there are some price levels, you can say, or there are some areas which you can identify as highly liquid areas. Okay, so anywhere, if on this chart you see any price level, such as this price level, this price level, this one or this one, in the same manner, like any commodity, any coin, any security, any stock, you can say that is highly liquid or low liquid. You can also identify some levels on a chart or a technical chart which are very highly possible to liquidate, or there are so much money involved on those levels, or so many orders are placed at those levels, because money is involved with the in terms of orders. So on the price levels where you have maximum number of orders placed in the market already, those levels can work as the place of high liquidity zones. All right, high liquidity zones. That means on these levels, that particular coin, such as this Bitcoin, is highly liquid, and at that place there is the maximum number of orders. Any kind of position can be bought or sold, and those levels are known as liquidity zones. You understood it? And in the same manner, anywhere such as this level, if this level has maximum number of orders placed, so this area is possibly to be used by smart money, or you can say institutional money, all right, such as whales in crypto, PMS, mutual funds in stock market. All right, so any institution, any smart money can use these levels to actually execute their own orders, because their orders are not small orders like us, like retailers. They have very high quantity of orders of any coin, of any stock, of any other commodity they want to trade. They want to buy and sell on a very big chunk of orders, so they need the counterparty orders in the same number. So on those areas where these people can buy and sell, these areas are called liquidity zones, and the orders placed there are called liquidity in a chart. What it is called? Liquidity in a chart. So let me show you some examples of it. So look at this area here. You might have seen sometimes, let's suppose you might be considering this as your support level. All right, this as your support level. Reason being, because no candlestick has closed below it, price has consolidated above this, had a breakout, came back, took support, went up again. So this time you might be considering that this is an important support level. But usually what happens, price what likes to do, it comes and drops a bit lower and then likes to go back up. So what actually happens here is sometimes we don't understand and we think price is random. But after today, you will know price is never random. Let me show you how. All right, look at this. So actually what you were thinking here is that everything is happening randomly. It's not like that. So what actually happened in this zone when price started coming into it? See, when price started making a rally from here, look at this. All right, so what happened is anybody who bought anywhere, they started placing their stop losses just below these swing lows. Am I right or wrong? Anybody would do that. Let's suppose this is a breakout of this rectangular zone. People would buy here and would place their stop losses there. So they will not place their stop loss in between this box. No, they won't. They will place their stop losses, because that's how retailers have been taught always to use their stop loss. So they would be placing their stop loss just below this, and this area becomes a high liquidity zone. Why? Because this is the area where maximum orders are placed. Now what price likes to do before going up, it likes to come back there, hit those stop losses. When it hit those stop losses, everybody who was actually a buyer, look, try to understand, everybody who was a buyer here, everybody who bought here, he was a buyer. He wanted to hold it maybe for this target. He wanted to hold Bitcoin for a very long time. He would have placed his stop loss here because he has seen this breakout. But if he is a buyer and somebody big player, someone who's a big player wants to buy also, how would he get sellers? So what he will do, these buyers have their stop loss here, and their stop loss is actually a selling order. Try to understand, if you are in a buy position, your stop loss would be a sell order. So they would be taking the price back, hit their stop losses. These all buyers will become seller. Now they all are seller, and that big person will buy it, and he will become buyer and will pump the price. Similarly, when price starts going up, again people started buying here. They put their stop losses just below this. What happened again? Price came back, hit their stop loss, make those buyers into the sellers, convert them into seller. They buy their self and pump the price. So everybody who bought here, they were also buyer, but unfortunately due to the price manipulation, they became seller. And now institutional money is the buyer. You getting my point? And these zones are called liquidity zones, and this is called liquidity absorption, or we call it liquidity sweep. In simple language, you usually know it with the name stop loss hunt. So we might have heard that price likes to come back to take my stop loss and go into the direction of my target. What should I do? These must be your questions, but try to understand this stop loss phenomena is not random. It happens with purpose. It happens in the areas where people like to place their stop losses. So does this mean I should stop placing my stop loss? No. It means you need to understand which are high probability areas and maximum retailers would like to place their stop loss, and you need to stop doing that, and you need to find better areas where orders or number of orders will be less, where less people will place their stop losses, and that would be the best place to place your stop losses. Or you wait for the smart money to buy and manipulate the price, and after that, after shifting the market structure, you start buying after confirmation, and then you place your stop losses below these swing lows and swing highs. So that's how you can actually beat this price action. That's how actually you can use liquidity concepts in order to make your positions better and trade better. And that's how you can use liquidity concept to change your trading style. So stop looking at stop losses as a stop hunt, as a random price action. Start looking it as a liquidity zone. All right, in the coming videos and in my next episodes, I'll start explaining you more about liquidity concepts, and how you can deal with these zones, how you can identify these zones. All things I'll be starting soon on this channel as well. So don't forget to subscribe if you are new here. Maybe you won't see my channel again if you don't subscribe. So don't do that. Subscribe it, and if you can share it with your friends who only understand English and does not understand Hindi, they can watch my coming videos to understand these concepts better. So now you know why these stop loss hunt happen. Start digging in and start finding out how to beat it, how to learn liquidity concepts, and you are definitely going to win this trading battle. I hope this video has made sense into you. I hope this video will help you understand price better, the concept of liquidity, and in coming videos I would be able to help you more. If you want to subscribe any of my social media account, please use only the links from the description. There are some people who are impersonating my name and photos to scam people, so be aware of it. If you want to follow me on any other channel, another social media account, use only the links from description. All right, and if you like this video, or if you want to give me any feedback, please hit the comment below and write down your feedback on this video and what do you want me to make in future as well. So thank you so much for watching. I'll see you in next video. Till then, take care. Bye bye.